Okay, so tonight, what we're going to be talking about is three tax moves that keeps high earners wealthy. And now I'm going to give you those three moves that you can do also. Okay, so I'm going to be reading from my notes because I went some deep diving on this one. Okay. All right. So basically, as we know, high earners, they don't just make money, they often play the tax game smarter. Okay. Of course, with a little help from me. Okay. So here are the three strategies that moves that can often help you stay wealthy. Now, listen, put in the chat where you are from, okay? So I want to hello to you, okay? Tell me where you're joining in from. Tell me where you're joining in from. All right. So, tax move number 1. Maximize tax advantage accounts. Okay? So, which account are we talking about? We're talking about 401k, 403bs and your IRAs, okay? These reduce taxable income now and grow tax deferred. Okay, so you are saving on both ends. Okay, let me know where you're tuning in from. HSA, that's Health Savings Account. This is like triple tax advantage. Basically, you are contributing, your contribution are deductible, they grow tax free, and the withdrawals for medical expenses are not even taxed. Okay, so that's pretty awesome. Then let me know where you're tuning in from. Put it in the chat. And then we have the backdoor Roth IRA. We're going to get into that more detailed a little bit later down the line. Okay, so for those who have above the limit income, this workaround allows the Roth contribution non-taxable income conversion. So we'll talk more about that later. Another thing that you can do as a high earner to keep your wealth is you can use business structures. Yes, you could form S Corps, you can form an LLC to reduce your self-employment taxes. Okay. Now, with these business expenses like home, travel, insurance, equipment, etc., etc. Let me know where you're tuning in from. Put it in the chat. What tax strategy are you using right now to save you some money? Or you can even ask me a question. I'll definitely answer those. Okay. What tax strategy are you using right now to save you some money? All right. Another thing is with the business structure, you could shift your income to family, such as, to lower your tax bracket, to help lower your tax bracket, such as paying your children. But the children has to be paid for doing legitimate business activities. Okay. So legitimate business work. All right. So you have to be paid to be doing legitimate business work. All right. Another thing that you can do is you can harvest losses and optimize your investments. So when I say harvest losses, what I mean? I mean that you can sell your losses to offset your gains, okay? Sell those losses to offset your gain and then reinvest it strategically. You could donate appreciating assets. So basically, giving stocks to charity to avoid capital gains, and you get an earning deduction. Okay, so tax tips. All right. um these investments is a tax efficient fund. Like you could invest in tax efficient funds, like like index funds, or even a mutual bond. Hey, Jovalie, hi. You could make investments into these funds or bonds, which generate less taxable income. All right. Now, these strategies, hey, P. Jill. Hey, how you guys doing? Hey, money cash. Hi, how y'all doing today? I'm glad you guys are joining because we are talking about how the high earners keep the money in their pockets. Okay, so these strategies aren't just money saving activity; they are preserving growth and they are creating wealth across generations. Hey, Artress. Hey, Maddie's. Artist double. Hey, how you doing? So these strategies, they create wealth, they create tax savings, and they create wealth across generations. All right. So when I was talking earlier about the backdoor Roth IRA, let's talk about how we get into it. So basically, the Roth IRA offers tax-free growth on your investments. All right. Hey, artists. Uh, yes, thank goodness. Oh, thank you, Anna. Anna, thank you so much. I'm sure you are a beautiful individual yourself. Okay, so the backdoor Roth IRA. So this is how we can use that backdoor Roth IRA. Okay, it's a tax free growth investment. It when you withdraw it, it's tax free also. So you can withdraw the retirement tax free. If you're 59 and a half and the account is over 5 years old, then 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 you have no problem there. Okay, so you have no required minimum distribution during the lifetime of this account, and it's also tax free. Yes, Jubilee. I love tax free. Definitely. This is definitely a tax free investment. Hey, Archers, you're tuning in from Memphis, Tennessee. Love to have you here. Thank you so much for joining us. We trying to save some money and be awesome. Good evening, Carter. Thanks for joining. Listen, guys, Carter is a young man who is joining in on learning how to save on taxes, right? Okay, so with being a high income earner, if your income is too high, you are barred from contributing directly. That's where we use the backdoor Roth IRA. All right, so let's break down the backdoor Roth IRA. Uh, let's break down the backdoor Roth IRA, okay, step by step. So, contribution. So you can contribute to your traditional IRA, right? And then you make the non-deductible that you would normally make after tax dollars, of course, for 2025. I think the limit this year is 7,000 or 8,000. All right, we can check back at that, but I think it's 7,000. Or and when Artris wants a kiss. All right, let's kiss these wealth numbers. Let's kiss these tax strategies so we can save some money. Let's kiss those, Artris. Okay. Do 12-year-olds get taxed? Well, if you have a job, you get Medicaid and Social Security taxes because you want to save some money for when you're older. Okay, Anna? Um, Okay, so back to the backdoor Roth IRA, the step by step where we're breaking it down from. Okay, so put in the chat where you're from. Okay, put in the chat where you are from. Put in the chat where you're tuning in from. Okay, so the conversion of the Roth IRA. So let's say you put the limitation in for 2025 of $7,000, $8,000 if you're over 50 and higher. All right. Then you convert it you convert it to a Roth IRA. Oh, hey, New York City's in the house. Bronx is in the house. That's so cool. Well, we have people from Memphis, Tennessee. Then we have people from the Bronx. Listen, we are reaching a wide range tonight. Yes, yes. Okay, so let's say you put in your contribution, right? And then once you put in your contribution for the limit for the year, so 2025 is 7,000, and then you make the conversion from the traditional to a Roth IRA. So with this conversion, you are able to convert it. Since you've already paid taxes on this, the conversion is typically tax free unless there's earnings or you have other IRA funds that are involved. Okay, so things to consider: the pro rata rule. All right, with the pro rata rule, if you have other pre tax funds, the IRS requires you to calculate the taxes based on your ratio of after tax to pre tax money across all your IRAs. Okay? Uh, Send you a plane ticket to Memphis. Oh, hey, James. How you doing? Tuning in from Atlanta. Hey, Atlanta's up in here. Nice. Yes, let's talk about this money, James. All right. So once you do the conversion, you have to make sure that you don't have any other Roth IRAs or other IRA funds, or you did not take, or you do not have any growth on that conversion. So once you convert, you have to make sure that no growth was on that conversion, because if there were growth, you could definitely trigger a taxable event. All right. So we got to make sure that that's not happening. So you got to make sure you talk with your tax advisor to make sure that you can do this backdoor Roth IRA. It can work. All right. It can work. It can work. All right. So if your existing Roth IRA didn't have a growth, then this is a good deal. All right. You must make sure that you are filing. All right. Once you do the conversion, you have to make sure that you file. All right. You have to make sure that you file with the IRS. Your financial institution should also issue a 1099-R to record the conversion. All right. So the timing for this thing does matter. Yes, subscribe, Artress. Subscribe, Dudley. Subscribe. Yes, please like, share. Don't keep me a secret. All right. Don't keep me your best kept secret. Tell everybody about me. All right. All right. So your timing of this conversion does matter. It's very important that you, after you make the deposit for your contribution, you do the conversion right away. All right. Because you don't want your account to have a gain on it, and then you would have to pay the taxes on that gain. Okay. Waiting too long would mean that, you had some growth on there, and you don't want that to happen. All right. Yes. Like, share. And guys, if y'all have any tax questions, put them in the chat so I could answer them for you guys today. Yes, like and share, like and share. All right. I don't want to be your best kept secret. I want you to tell everybody about me. All right. So let's do an example for what we just talked about. All right. For the backdoor, the whole Roth IRA situation. So let's say you earned $250,000 and you wanted the Roth IRA to contribute. You contribute your maximum amount for the year to your traditional IRA non-deductible, okay? Then a week later, you converted it to a Roth IRA, okay? Okay, Artress, I'll help you to be a moderator. I actually don't even know how to do that yet, but I will learn, okay? All right, so you made your contribution to the Roth IRA. All right, so you did the conversion to the Roth, from basically the traditional to the Roth. You have to make sure that you do the conversion like right away because that's important. Timing is important with this thing. All right. If there's no growth, then the IRA fund is not taxable. You don't owe taxes. Okay. All right, y'all get that? You don't owe any taxes, all right? Now you just saved $7,000 of tax-free in your Roth IRA, and then you have no deductions on that contribution, all right? And that the initial contribution to the traditional IRA is already non-taxable, meaning that you used after tax dollars. So it was basically taxed already. Okay, what's the best thing to do with an old 401k? Well, with an old 401k, you can either roll it over into a Roth IRA, because the 401k, it depends. Actually, this is a perfect example. So the 401k that you have to find out if it's a traditional 401k or if it's a different one. So most 401ks are traditional. So if you have a traditional 401k, you make your contribution for the year, your non-taxable contribution for the year, and then you could convert it to the Roth IRA so that you can get this backdoor benefit of taxes. Okay, so that would be like a good deal for you. All right, so like I was saying, that this is no tax, oh sorry, no deduction on that contribution. The initial investment is the traditional IRA, so it was non-taxable, and then you are already using after tax dollars. All right, so don't get the tax break. Don't mess this up, all right? But set the stage. This is gonna basically set you up for a tax-free conversion, all right? You need a good tax wife. Okay. You'll have one. You should manifest that. All right. Okay. So, Dudley, like and share. Make sure you tell everybody about me. All right. All right. So, this conversion may trigger taxes. Okay. If the money has growth, which we already discussed, all right, before you do the conversion. So basically, make sure you do the conversion quickly, all right? And if you have any pre-tax IRA balances, so you got to check and make sure none of these things are in play when you're doing this conversion, all right? But if you have earnings or other pre-tax funds, the pro rata rules kicks in. The pro rata rules kicks in, which what we talked about earlier. Guys, remember to like and share, okay? Don't keep me your best kept secret. Like and share, all right? The IRS treats all your IRA in like this big pot. So make sure that you are clear about all the things that's happening with your fund, especially if you're going to use this strategy. All right. So basically that's pretty much it for the backdoor Roth IRA. It's very, very important that you report this correctly. The financial institution will also issue you a 1099 on the distribution of the traditional IRA. And if you mess this up, you may assume a taxable conversion. And we don't want that, right? We don't want a taxable conversion. So we got to make sure that we are basically paying attention to the timing of these things, and we're paying attention to the timing, and we're making sure that we don't have any gains on our conversion. So we're doing everything quickly, all right? Basically, timing affects your liability, all right? Hey Ruth, thanks for joining in. Put in the chat where you're joining in from. We're talking about how to keep your wealth for a high earning individual. We talked about 3 moves today. All right. So, okay, the 5-year rule. We didn't go over the 5-year rule. So the 5-year rule for this is Even though the Roth IRA are accessible at any time, converted funds must sit in the in the account for 5 years before you can withdraw without any penalties, all right? Unless you're 59 and a half or older, then you have any access to this account. It said, I see you don't need my services at Artist Gone. Oh, Artist, I don't know how to make you a moderator, so I'm sorry. Maybe next live I'll figure that one out. Okay. Well, you have a good night. All right. So these are some of the common pitfalls for the for this thing here. All right. Double taxation. If you don't keep track of your non-deductible contributions properly, you may or could pay taxes again. So basically, you could possibly pay taxes twice, once when you roll over and when you withdraw. Okay, so make sure you don't do that. Okay, and then misreporting. Hey, Veronica, punch in where you're calling from. What's about 401k and Bitcoins? Okay, so Bitcoins, we'll do a separate one for Bitcoins because Bitcoins is fun. You have to make sure you do actually, if you do the Bitcoins in a 401k, it could be very beneficial to you. Okay, Heru? So maybe we'll do the next one on Bitcoins and your retirement. All right? Bitcoins and your retirement. So make sure you're reporting all of these things properly because you don't want misreporting, okay? This could trigger an audit and we don't want that, all right? We don't want that, okay? We don't want audits, we don't want penalties, all right? So I hope that was helpful to you. Let me recap for all my people that joined in late. We talked about 3 tips that can keep our high earners that don't just make money, they know how to play the tax game well. All right. We talked about maximizing their tax advantage accounts. We talked about using business structures to help them income shifting. And we talked about harvesting and optimizing their investment. So I hope that was helpful to you. I'll see you next time on Tax Talk with Nadia. Like and share, okay? Like and share.